Hello and welcome to this Hot Scans blog video. This is Jeff Bish, president of MarketGauge.com, and I'm doing a video today because I thought it would be interesting to take a look at Apple after Apple announces relatively better than expected earnings. It, instead of acting positively, gives us a big negative engulfing pattern on the daily chart. So that made me think of a couple things. First of all, where are the key points to look for a reversal if it does start to try and climb back up? And also, were there any other stocks out there that had a similar key reversal day on good volume? So let's first start with Apple. And there's a couple of points here that I watch out for on the downside. First of all, we've got the big negative engulfing pattern, and what I wound up scanning for in hot scans is actually key reversal, and we'll talk about that in a minute. But it took out its prior day's high, and I also scanned for a 10-day high to make sure that it's had some kind of a move up, but then it closes below the prior day's low. All right, so that's a key reversal day. This is also a massive bearish engulfing day. Now, in terms of the moving averages on my chart, the green is a 10-day moving average. We look at that very closely. The magenta is a 50-day moving average, and the gray is a 200-day moving average. The thing I find interesting about this huge engulfing pattern is that the volume, while heavy, wasn't as heavy as I would have expected given it was an earnings day. In fact, this day here, Carl Icahn tweeted that he was in the stock and it was breaking to the upside over a 200-day moving average, or maybe Carl was saying he's going to meet with Tim Cook. This is a Carl Icahn tweet day, and the volume is much bigger than its earnings day. So I found that a little bit interesting, and the way I interpret that is when you get a big engulfing day like this, it needs to follow through. It needs to trade below the low of that day convincingly to really be sure that that is a exhaustive top. So it would be better if we had, it would be more bearish, I should say. It would be if we had more volume than this. That notwithstanding, this is still a big volume day, so we can't ignore it completely. So where might it hold if this isn't the top or a significant top? Well, first, you've got the low of the day. Next, you've got this 508 area, which you can see has been significant in the past in terms of swings. It's also going to line up with the most recent trend line. So 508 is going to be important. Then you've got this level in here that's going to be important, and I would round that all the way down to the 50-day moving average, which at right now is around 492.68. By the time we get there, unless it's today, it's likely to be 493. So I like to look at a few major points and have areas around them. So that for me, that would be 508 and then essentially 493. 500 is probably going to be significant just because it's 500, but really 493 would be the number I'd be keying on. If the market turns back to the upside, this level in here is likely to be the zone that Apple fails at if it's going to fail. So if Apple starts to rally back up, this area should become a concern if it starts to fail. All right, so that's the big picture. The more specific points are the lows here and the highs here. Now finally, let's take a quick look at yesterday's action. If you're familiar with the way we look at the markets and you're familiar with the opening range, then this won't be of much surprise to you. But one of the things we do is we look at the first 30 minutes of the trading day and then identify the high and the low of that day. Once you break the 30-minute range, that's your bias for the day. Notice how well it worked on Apple yesterday. A collapse through that 30-minute low, and when it tried to rally back up and get through it, that was where it failed again. Second attempt to even get close to it, fails again. So what does this mean? If you wanted to be bullish Apple, Once you got below the 30-minute opening range, you had the opportunity to either get out or not get in until it really comes back up through that opening range. Either way, any bullish stance that you put on hold once you're below the 30-minute opening range kept you out of a lot of pain. For the more aggressive traders, we look at the first 5-minute range. And in that case, you can see Apple acted perfectly again. A big volume first 5 minutes. Once that 5 minutes was broken, you have a warning from the bullish side, and just as the analysis was on the 30-minute, the 5-minute worked the same way. Tried to get back up through it, couldn't, broke down again. So use those 5 minutes and 30-minute opening ranges to give you a bias, and they'll keep you out of a lot of trouble. Even though you had positive news for the day, the stock action was telling you today was not a day that it wanted to rally, and by the end of the day, could have been telling you something much worse. So before I end, let me pull in the hot scans view that I talked about earlier. And so what I did with hot scans was I wanted to see whether or not there were other stocks that had a similar pattern. The overall markets yesterday were either bullish or mixed, depending on the index. So I wouldn't have expected a whole lot of key reversals. And in fact, we didn't get a whole lot of key reversals. I'm going to jump down to the results. And while I'm not going to go through the individual stocks, you might want to check out Waste Management here. That had a very similar pattern to Apple in the sense that huge day, range-wise, closed below yesterday's low at a major high. You can see Apple showing up there. But keep in mind, I didn't scan and find Apple. I knew Apple had earnings because I was watching it. When I saw that it had a key reversal day, that's what made me go to hot scans, use the tool to see whether or not there was other stocks that might have interesting opportunities. And in fact, waste management could be interesting if you're a bearish, if you like to be on the bearish side. And I forget which one in here, there's a good flag that has a key reversal day as well. So check out these stocks if you're interested in this pattern. And the point of bringing you to hot scans was just to show you that if you want to find a pattern like this, it's really easy. All you have to do is change these settings under historical ranges and daily momentum. So today's high is greater than the 10-day high. Now I did that to make sure that it was greater than both yesterday as well as a more significant range. I could have made the 10-day high here any number of choices. You can see I could have made it a 30-day, 3-month, 6-month, 52-week high. I chose the 10-day. This way, if it's a net bearish flag, it would show up as well. And then the other definition of my key reversal is that the last price has to be less than yesterday's low. And that'll give you that bearish reversal. Now, I also changed one other filter, which is because I was on a big volume scan, the scan period relative volume would default to it being greater than 0. I changed that to take it off, and as you can see by the results, that increased the number of stocks that showed up. It doesn't necessarily make them better, but I wanted to see if there was any negative price action because, as I said earlier, the day overall in the markets was not a big negative day. So these stocks had really negative action on a day in the market that really wasn't that negative. You can see the SPYs at the top, which are always at the top of hot scans, and the Qs. The SPYs at a -8% off the high means that they closed right near their high of the day, and the Qs at a -36% means that they traded or they closed at 36% of their day's range from the high, so more or less in the top half of the range. And these are stocks that are closing in the bottom of the range and below yesterday's low, so they're much weaker than the overall market. If the market continues to march higher, these stocks could easily reverse, but if the market gets weak, these stocks could be good candidates for some shorts on strong stocks. So hope that helps, and I'll see you in the next post.